Mike Green is an executive. He's the chief executive, of Tenex Capital Management. Tenex assists middle market companies in financial or operational difficulties. Mike, it's good to have you with us. I think of you as Mr. Fix-It. They call you when things are broken, and you come in and you try to fix things, right?
That's what we do, Pimm. We try to fix it, provide capital, provide operational expertise, and try to have the small businessman, the CEO of a company that's under $200 or $300 million, who has a lot of difficulties facing them that some of the larger companies don't have. We try to help them overcome some of those difficulties, including the capital needs and the operational needs.
All right, now before we get to sort of the current environment, I just want to see if I can remember some of the key points that you brought up. It's almost like a philosophy of dealing with businesses that are in crisis. Number one is that it's really okay to be average.
Well, somewhat controversial by my saying that, but I agree. If you try to overreach, I mean, you know, statistics say that over half of us are average. And sometimes we need to face that. Gauss was right when he came up with that theorem many years ago. And if you try to exceed your average abilities by borrowing money, investing in excess capacity, developing products that are not really in your sweet spot, you can get yourself in trouble and lose money for your investors. So sometimes you have to accept the fact that you are an average company in a commodity industry and try to maximize the cash and a modest amount of growth and get a better return for your investors than taking large risk by trying to leave that statistically average domain.
Now, when you mentioned the concept of maximizing your cash, I think another thing I recall is that there is a lot of money to be had if you just go out to your customers, your suppliers, your vendors, and actually get people to pay the bills that they owe you.
Well, that's right, and sometimes that goes against trying to grow your business aggressively. When you want to grow aggressively, you need to loosen terms, you need to provide credit, you need to finance your customers. But if growth isn't the only thing on your agenda, if generating cash for your investors and generating profits versus growth is more important to you, then yes, you can be more selective. You can apply terms to customers and say, if I'm really a valuable supplier to you, you should pay me like I'm valuable and pay me on time.
Now, the current environment, what's your pulse right now when you look at middle market firms? Are they really seeing any kind of end market demand, or have they kind of boosted their capacity and they're just waiting?
Well, people, Pimm, are fearful of demand destruction, as we call it in this business. Demand destruction can take place when your raw materials, your supply chain, starts driving your costs up, and you continue to pass it on to the customers to the point where they won't take it anymore and they stop buying. So if you look at the issues that the U.S. Manufacturer is facing when they're paying more for oil byproducts, paying more for other raw materials, they're worried to what point does the consumer or the business-to-business buyer say, no more, not enough. So the people I talked to, when they went through, you remember when I was on here about a month ago, we had some issues throughout the world. We had some natural disasters, we had some geopolitical issues, and that had an impact on global markets. We speculated whether that would cause small business managers to hold back or pull back in their development of new productivity projects, their development of excess capacity. And my assessment and what I hear in talking to people is they've done just that. People have put the brakes on. They've slowed down a little bit, and they're worried about many things that are out of their control.
One of the things they might be worried about are interest rates, right? Variable interest rate loans. Where are interest rates? They keep going down, but that can't last forever, can it?
No, I mean, put yourself as a home buyer, you know, when you're faced with the fact that if you want to have a long-term steady mortgage, you pay a little higher and you get that steadiness. If you want a lower rate, you get some variability. Most smaller business managers will subject themselves to borrowing-based loans or variable-based interest loans to make sure they can get the money they need. But if you're worried about demand, you're not going to take that kind of risk. Yeah, small business managers are worried about a lot of things that have to do with what's going on in Washington as well.
I was going to ask you about tax policy and the possibility of spending cuts.
You just hit the two nails on the head. The combination of what many people say we need is an increase in the tax revenue generation into Washington, and a decrease in spending will hit many small businesses in adverse ways. So they're worried.
All right. Always refreshing and always sober thoughts from you. Thank you very much, Mike Green, Tenex Capital Management. Thank you very much.
Thank you.